Welcome to the VSA Tech and Transitional Energy Podcast. Today is 24th of March. I'm Peter Mattsson, standing in for Andrew Monk, who has embarked on a top secret mission abroad. I'm here with our analyst, Phil Smith. How are you today, Phil?
Very well, thank you very much, Peter. A beautiful sunny day and delighted to have you on the podcast today.
Well, thank you for that. It's a beautiful day indeed. And as I'm head of private equity at VSA Capital, I thought I'd give a little brief intro to the space. So private equity and venture capital typically invest in private companies only. But there is slight differences between them. And venture capital firms seek equity ownership in early stage companies, investing in rounds like seed, Series A, B, C, and so forth. Whereas private equity funds typically invest in later stage companies, bigger ticket size, and usually with controlled stakes. So private equity is more focused on the mature and well-established companies involved in growth and margin expansion. And although there are certain areas where they both come in, and that is growth equity. Both private equity funds and venture capital firms invest in growth equity investments. And these are slightly later stage companies and they sort of in different structures, usually through preference shares, pre-agreed exit rights, and certain control mechanisms. They both invest in that space. And it's a huge space. I mean, just in UK, London tech companies raised about, did you know this, Phil? Almost 20 billion pounds last year only.
Wow, it's astonishing, isn't it, Peter? I was reading that we talk a lot about tech companies on this podcast. That that London now is the fourth highest city globally, behind kind of San Francisco and New York and Boston. I mean, it's really astonishing what's going on in London. But it is the scale of it, Peter, and also the scale of private equity. You might want to talk about that as well. It's amazing.
No, it is. But just on the VC side, UK companies, I think they raised about 7 billion last year in new fundraisers. We've seen some of the news flow from the likes of Index Ventures, Balderton Capital, 83 North, 8 Road Ventures, all London headquartered VCs. So we're doing really well, and particularly well, of course, for the fintechs. I mean, they raised, just fintechs alone in London raised around $11-12 billion last year. What do you think of that, Phil? London really has a focus on fintech.
Yeah, it's very well. I mean, we're it's a global financial capital, but we've developed a lot of early expertise in it, and we've developed some a number of unicorn companies that are valued over $1 billion. But I think what's also interesting as well is that we're seeing this, we're seeing companies from the regions as well, outside of London. It all kind of, the effort and momentum, washes out across the UK. I think it's really exciting. I think that we've got a lot of very big banks here, huge financial organizations, and it spins out a lot of talent that builds these new companies.
Absolutely. And of course, fintech is attractive in the private equity space as well, of course. Mm-hmm. And just where the London tech companies raised about 20 billion pounds in early stage money from venture capital firms, the private equity space is almost 50 billion just for mid-market deals last year. And I think the number is something like 800 transactions. So it's been a very, very busy space. And on that, Phil, I mean, you obviously follow that space very closely as well. I mean, what do you see there in terms of multiples and things on valuation side on PE deals?
Yeah, it's quite interesting. And I was, analyst at the end of the day, we focus, very much on valuations and what's happening in the sectors. I mean, there was a really good recent report from KPMG, the accountants on the mid-market, as calls, or mid-sized companies deals and transactions, and they were saying that multiples have remained pretty steady, in the space of around 10 times earnings. And that, a lot of the money was going to TMT businesses, tech, particularly business services. So at least for our investor, for investors that are listening and have got their own businesses, it gives a feel for valuations, but also, hopefully the scale of activity that's going on in private equity. And another thing, I mean, Andrew and I have talked about this on podcasts as well, is if you look at the IPO market, I mean, I remember seeing the stats, and it was about a couple of years ago, but over 50% of IPOs come out of, eventual private equity exits on their investments. And as you know, the PE funds are holding for kind of, 3-5 years and a bit beyond.
Yeah, absolutely. And I think last year was a record year as well on that, wasn't it?
Yeah. Oh, yeah.
So, no, it's a very active space, and anyone listening in can always contact us if you want to know more about the space and know what we are up to in that space, companies that we are helping and so forth. But otherwise, apart from that, there are a few listed companies that you can and should follow if you're interested in this space. And some of the earlier stage VC type investors is, of course, IP Group, which we talked about a lot on this podcast, Draper Esprit, and of course Superseed, which recently listed their feeder fund on Aquis. So those three companies are really interesting. On the private equity side, you have the likes, of course, like 3i, Oakley Capital, HG Capital, Petershill Partners, and Bridgepoint, of course. And Bridgepoint, by the way, they reported results today, and quite impressive, Phil. I mean, they have now 33 billion under management.
Wow,
It's a good size private equity company, and that they do actually invest a little bit in not early stage, but in growth equity. They're very active. And on top of it, they reported increased revenues to 270 million, which is an increase of 40%, and profits, EBITDA, of around 90 million pounds, which is an increase of 72%. So they had an astonishing great year, which is very impressive.
Yeah. Wow, interesting. One to watch. Just say to investors, it's Bridgepoint Group PLC. The ticker is BPT. And I think it's about 2.7 billion market cap. Very, very interesting, Peter. Thank you for that.
Yeah, but it's been a lot of news flow this week as well. I mean, I just wanted to ask you about one that I saw yesterday, which is ITM Power announcing a joint venture with Vitol, the largest energy trader in the world.
Wow. Indeed. I mean, ITM, it's on the transitional energy kind of space, Peter, and a good spot there. I mean, ITM ticker is ITM. It's 2.1 billion market cap now. Incredibly, I mean, this is an electrolyzer development company, so they have very special technology that takes electricity from renewable energy sources or otherwise, and produces hydrogen using its electrolyzer technology. And yeah, indeed. I mean, they've announced a strategic partnership with Vitol. Peter, you probably know more about them than I do, but isn't this one of the largest oil traders, gas traders in the world, as well as renewables?
Yeah, they're absolutely huge. But what is this thing? So it's called Motive, which is the name of the joint venture.
Yeah,
and the idea of that is to roll out refueling stations.
Yeah, what they're going to do, Peter, is Vitol are investing up to £30 million in this joint venture, and the idea is that I think that ITM's like electrolyzer tech will be used at hydrogen fuel refueling stations. So one assumes that electricity is getting fed to the fueling stations, and the electrolyzer is producing the hydrogen. The hydrogen is used for refueling vehicles. And we're seeing a lot of development in terms of hydrogen power for heavy transport rather than passenger vehicles, and this is all to do with sort of power and weight and storing hydrogen versus batteries on truck. Heavy batteries on trucks, hydrogen is kind of preferred, and we're seeing developments in this across Europe. For instance, Pressure Technologies, one of our clients, has developed hydrogen storage, very high pressure cylinders, and they're working with Shell on refueling stations across Europe. So this is a JV in the UK on hydrogen refueling stations. So quite an exciting development.
Very, very exciting space indeed. And another story in that space is Hydrogen One.
Oh yeah, I saw that. This is ticker is HGEN, and they are a hydrogen economy focused investment fund, is my understanding. Is this so? This is an agreement with Safran Corporate
That's right.
Ventures.
Yep.
Yeah, it's Safran Battery Tech. Safran. I've come across that name before, but they they've announced an agreement for common investment in Cranfield Aerospace Solutions. I used to live near Cranfield. That's near Bedford, and Cranfield and airfield and all around it is very, very well known, a college for aerospace tech. So yeah, Hydrogen One have announced that they're going to invest alongside Safran £10 million in a development for, I think it is, hydrogen-based aircraft design, which is very exciting. Hydrogen-powered aircraft, and they're saying here that Cranfield Aerospace Solutions is they're saying a leader in design and manufacture of new aircraft design concepts, and they are looking to develop a Britten-Normand Islander passenger aircraft using hydrogen fuel cell power. How exciting is that?
That's amazing stuff.
Yeah.
Watching that space very closely indeed.
Yeah.
On just, do you want to run through some of the results updates that?
Yeah, I certainly will. I mean, there's been quite a few results and updates this week, but I've got to say something that has flashed up on my screen, and this was from the Telegraph, and it's announced the Telegraph are citing Shell, who I've just said that they're going to invest up to 25 billion in the UK energy system over the next decade. And this is after cutting some of their ties with Russia, and they're citing David Bunch, Shell's UK country chair, saying that 75% of this money is going to be spent on low carbon products and services such as offshore wind, hydrogen, and electric mobility. So that's very interesting. I mean, that's just come up, and for, oh my word, and for those sharp-sighted investors, Shell's share price is up 43% this year, probably one of the best performers.
Incredible, isn't it?
Yeah, but we know what that's been driven by, a very strong oil price. Peter, one that you highlighted to me, and I hadn't, I must admit, noticed before, and this is to do with the circular economy, is Renewi. I don't know if I'm going to pronounce this right. Renewi is RENEWI. The ticker is RWI. The market cap's 556 million market cap. And I had a look on Wikipedia, and I think this was known as Shanks a long time ago. But maybe not. Maybe it was. Maybe it wasn't. But it's waste to product business. So this is recycling.
It is, and they do a lot of. I mean, they do waste into a lot of different materials and energy.
Wow, yeah.
They do paper, metals, plastics, glass, wood, building materials, and energy. And I mean, it's a substantial business. I think they have something like 7,000 people employed on 160 something sites across 6 countries in Europe and UK. So in some of these countries, they are indeed the market leader in recycling.
Yeah, what an interesting spot. They had a full year trading update for the year. I think it's a year ending 31st of March, and the board has said that they're expecting performance to be ahead of previous expectations.
Yes.
That's always a good thing and something we look out for. So I think.
And the symbol on that is RWI.
Yeah. So I think we'll look at that one a bit further because I haven't necessarily come across that before. So a bit more in terms of news flow. Peter, I don't know if you've come across Big Technologies. The ticker is BIG, market cap 660 million. And this is a company that IPO last year, raising £200 million at a valuation of 577 million. So it looks like it's above its IPO price. Now, this company offers its people tracking solutions. So, people tracking, of course, we know is the criminal justice system has tracking devices on people, but also tracking devices are used for vulnerable individuals and in healthcare, and they also produce not only the tech for that, for tracking, but also push button alarm systems, wristband location trackers. So this is wearable tracking tech for people, basically. And the company produced full year results, right? And in their full year results, they said their revenue was up by 27% to 37.6 million organically, which is a super performance. And I have to say, given that they've got hardware and electronics there, no tracking, that's pretty good. Given the restraints on supply, and they said that the majority of their revenues are derived from customers in the criminal justice sector.
Yes.
So it's 98% of revenue. An example of what they do is they said that during the year they got an 8-year contract. Well, nice long-term contracts there with the New Zealand Department of Corrections. And that's starting in the first half of this year. Also, revenue growth was driven by Asia Pacific and the Americas. So this is a proper international business. And they saw growth of 40% there. Europe declined 23%, but they had a one-off customer contract. Which was to be repeated. So what is I thought was interesting about this as well is that we talk here on valuations. This trades on EV to revenue multiple of 13 times, which is big, falling to 11 times, so it's growing. EV EBITDA 24 times, falling to 20 times. So this business really is growing, or forecast to grow by the analysts. Now those multiples in inverted commas look high. But what I would point out to, and we always do when looking at higher valuations, is do they have something extraordinarily special? And also, are they exceptionally profitable? This business, on first time I've looked at it, does appear to be very profitable with very strong margins, generating an operating margin of, from my calculation, of about 37%. So what do high margins mean? High margins generally mean that customers really, really appreciate the products and are very much prepared to pay for them, and that there is not a tremendous amount of competition around. So I think that one's worth a look.
Absolutely. And another company that I noted is Softcat, SCTS symbol, which is a hybrid cloud solutions provider. And they announced results as well, didn't they?
Yeah, it's IT. Yeah, IT service. This is a nice company. IT services business, and they announced results to. I think it was interims. If I maybe got that correct, but no, I was looking. Yeah. Anyway, so they were. Yeah, the sales to the 31st of January anyway were up by 33.6%, and their operating profit was up by 12% to 64 million. I mean, this company trades on an EV revenue multiple of 2.5 times and an EV EBITDA of 24 times with 2.4% div. Now, it doesn't necessarily have the operating margins the one we just suggested, but certainly has very strong growth, and has done so consistently for a long time. And what they've said is quote, notwithstanding the very high bar we set during last year's exceptional first half performance, this is their interims, these results preserve a run that now extends to 66 consecutive quarters of year-on-year growth. That's called a track record. And people, investors look at that carefully and do pay for it. But
very impressive.
Yeah, I thought so. I thought that was a good. Yeah, I thought that was a nice, strong set of results for Softcat. And again, this is one that we would be taking a closer look at. Now, another in the IT space this week was Cape Technologies. Yes. The ticker is KAPE. It's a 1.5 billion market cap company, and this again trades on a different set of metrics. It's on an EV to revenue multiple of 3.5 times, falling to 3, but EV EBITDA multiple is low. It's 12 times, falling to 10.7 times. So they've reported their full year to December, and they provide digital security software for consumers. I think they do private networks products as well. Investors correct.
They acquired ExpressVPN.
Yeah, absolutely. Yeah, well, they do private network products. There we go. Thank you, Peter.
Yeah.
So yeah, they did. I mean, they raised 258 million on the market. And you're right. So that was in October, the fundraise, and they did acquire ExpressVPN. So these results are to December 2021. And I think during that period, they did complete the acquisition for a total consideration of $926 million. Crikey. But that brought in 3 million subscribers to them. So they got a total of 6.5 million subscribers. Their revenue during the period, and you've got to be careful with this because they bought in they made the acquisition. But they said it increased by 89% to $230 million, or 20% on a pro forma basis. Yeah, so you've got to, either account the acquisition or not. You need to look at these results quite carefully. But it does seem to be moving in the right direction. The cash generation from operations, which we look at very closely, increased by 116% to $44 million. So that is actually that's good to see. But the company took on debt, or secured debt of 290 million alongside the equity raise. And in March 2021, was it 2021 or 22? But it did a further acquisition for 155 million. So look, at the end of the day, this is a company that clearly is moving ahead at quite a pace, doing large transactions, and of course they can bring with them their own uncertainties as well as significantly building the business. But yeah, it's an interesting story I want to follow up on, I think.
It is very aggressively growing and very interesting to watch what they will do next.
Yeah.
On the brand space, of course, very exciting news as well from S Ventures, who announced an acquisition.
Yeah, indeed. So we are tech, trans, and brands, Peter.
Yeah.
So we've got to fit in a final brand story to finish up on. Look, S Ventures is a client of ours. They're quoted on the London Aquis Exchange. The ticker is SVEN. It's 57 million market cap. And S Ventures has been, acquiring and taking shares in and building up sort of organic and natural food brands. So they're, it's very food tech orientated. So it does at the end of the day come up to under our tech space. And look, food technology is at the end of the day very, very clever recipes that are developed in laboratories to winning market products. And their best known product, I think, is Pulsin, which is UK protein bar, but they also do protein shakes, manufacture protein shakes as well. So, I mean, the strategy here is to acquire and invest in underdeveloped brands that have previously been poorly capitalized, and to build and scale those, to market them, to use e-commerce very, very effectively to build up market share. And so they announced today that they've acquired UK-based Market Rocket Limited, and they're an Amazon member of the service provider network with Amazon. It's a digital agency, and it looks like it's one that's been growing quite strongly. But Market Rocket have got their own technology platform and models that their clients use to analyze competitors, identify growth opportunities, and then to execute delivery. So, this is an acquisition of a tech platform and expertise to really accelerate market growth, I think, for S Ventures brands. So yeah, nice little acquisition for them.
Excellent stuff. And just on a different space a little bit, but did you see the news about nothing?
Yeah,
well, it's actually not about nothing.
Yeah, exactly. Go on, Peter. This was interesting.
No, it's a UK company called Nothing, who has announced that they will launch a new smartphone this year.
Wow.
And it looks really exciting. I came across this yesterday, and it's a company was founded by Carl Pei, who was also co-founder of OnePlus, which of course is an existing manufacturer of smartphones. And he decided to leave that company and start his own company, which he named Nothing. And they recruited the head of design from Dyson, Adam Bates. We really don't know that much more than that at some point this year, they're supposed to launch this phone. Wow. I thought that's really exciting. A UK-made smartphone.
Well, fantastic. That does sound exciting, and well, look forward to following that one.
Very much so. And I think on that note, thank you everyone for listening in, and we'll see you next week.
Well,
thanks, Phil.
Peter, it's been a pleasure having you on our podcast. And if anyone, as usual, as Andrew and I always say, anyone has any ideas, comments, companies who want us to mention, then please get in touch with us. And yeah, Peter, it's been a real pleasure.
Thank you very much, Phil. All the best.
Bye-bye.